Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today's topic is acquiring specialty clinics buyout financing in Halifax. Purchasing a specialty practice, be it dental, physiotherapy, or dermatology, can fast track your market position, add recurring revenue, and secure key staff, but you need the right financing mix to execute smoothly. Let's explore how Halifax healthcare investors can structure buyout financing. 1. Define your acquisition structure. Asset purchase. You acquire clinic equipment, real estate leasehold improvements, and patient lists, limiting hidden liability risks. Share purchase. You buy the business entity outright, including goodwill, staff contracts, and existing debt, simplifying continuity but requiring deeper legal due diligence. 2. Financing components. 1. Senior term loan. Covers 50 to 65% of the purchase price. Amortized over 5 to 7 years at a fixed or floating rate, prime plus 1% typical. Underwritten against pro forma cash flows, patient payer mix, and historical EBITDA. 2. Seller financing. Deferred payments to the seller, 10 to 20% of the price, often contingent on hitting post-close performance metrics, e.g., revenue or EBITDA targets. Aligns seller incentives with your success and reduces upfront cash needs. 3. Equity injection. Your own capital or partner co-investment, 15 to 25% of the deal. Demonstrates skin in the game, improving lender confidence and negotiating leverage. 4. Mezzanine or second lien debt, optional. Bridges any remaining gap, 5 to 10% of the purchase price. Carries higher interest, prime plus 3 to 5%, and may include payment in kind provisions or equity kickers. 3. Due diligence essentials. Patient and payer analysis. Review payer mix, private versus MSP, appointment volumes, referral sources, and seasonal fluctuations to project stable cash flows. ETA, staff and lease assessment. Confirm key clinicians' employment terms and lease terms for the premises. Consider relocation costs or rent escalations. Regulatory compliance. Ensure all licenses, health safety certifications, and billing practices meet Nova Scotia requirements. 4. Selecting lenders and partners. Local institutions. ATB Financial and Halifax area credit unions know regional healthcare cycles and can tailor terms. Healthcare specialty lenders. Non-bank lenders focus on medical practice acquisitions and often bundle practice management support. Private equity or family offices. For larger roll-ups, co-investment can boost equity and provide strategic guidance. 5. Structuring covenants and protections. Debt service coverage. Model combined EBITDA post-acquisition. Target at least a 1.2x coverage ratio on senior debt. Leverage covenants. Negotiate maximum loan-to-value and debt-to-EBITDA ratios with buffers for patient volume dips. Earn-out safeguards. Tie seller note payments to revenue or EBITDA thresholds to protect against performance shortfalls. 6. Execution roadmap. 1. Letter of intent. Secure exclusivity and agree on headline terms, purchase price, financing mix, and due diligence scope. 2. Due diligence 30 to 45 days. Finalize financial, legal, and operational reviews. 3. Commitment letter. Lock in lender term sheets for senior debt, seller financing, and any mezzanine tranche. 4. Closing 60 to 90 days. Execute purchase and financing documents fund sources, and transition operations. 7. Post-acquisition integration. Systems and billing. Migrate to your practice management software, standardize coding and billing processes, and train staff. Patient communication. Announce the acquisition to patients, reinforcing continuity of care and any new service offerings. Performance monitoring. Track appointment volumes, revenue per visit, and staff turnover monthly. Adjust operations to hit pro forma targets. Nesimo 3 action steps. 1. Prepare your pro forma. Build a combined financial forecast, revenue, expenses, and debt service for the first 3 years post-close. 2. Engage advisors. Partner with healthcare specialty legal counsel and a financial advisor experienced in Clinic M+A. 3. Solicit competitive offers. Approach at least 3 lenders, banks, credit unions, and specialty financiers, and use competing term sheets to negotiate the best spreads, covenants, and structures. Acquiring a specialty clinic in Halifax requires a balanced financing approach, senior loans for scale, seller notes for flexibility, and equity to secure favorable terms, combined with rigorous due diligence and integration planning. With this roadmap, you'll close efficiently, preserve cash, and unlock growth in your healthcare portfolio. I'm Haider Malik. Thanks for listening.